What's up, everybody? Happy Friday. Starting the live stream 1 minute early because I wanted to. Oh, hang on. Let me fix something. Wanted to start the live stream a little bit early because I want to see how this last minute. There we go. Market is now closed. All right, 4 p.m. Friday. Thanks for joining me this live stream. It's probably gonna be the last one for this season. For this year, 2025. I hope it's been a great year for all of you. It's been a great year for me, both in the market and outside of it. We're going to do a recap. Of course, today's topic is, of course, going to be the coin of bit. What's it going to do? And I got to ask you a question on Discord just now. Got me talking about this, if I remember the different phases that the market goes through. And of course, yes, I mean, we're basically in a phase that we were in very similar back in April of this year, a little dip off an all-time high and then a consolidation. So is it going to be different this time? This time it's different. It's four most dangerous words in markets and investing and trading. But let's play a little bit of music and let people filter in, and then we're going to answer that question and look at whatever you guys have to look at. I also talk about what I'm looking at as the year comes to a close and what I'm doing for next year. So let's get to it. All right. Well, thanks for hanging out. As I'm watching this play through, I can't help but remember that phase in the market. This phase right here. Then we'll get a Bitcoin, of course, playing back. And it is kind of important to just people forget. I guess I'm kind of blessed and cursed with a good market memory, because if you show me a point on a chart, I can basically tell you what the narrative was going on, what the sentiment was. And as I was going back through this, this replay right here. And by the way, if you guys, yeah, here we go. I hate that TradingView does that nowadays. If you go, by the way, guys, make sure that you do the like and the subscribe. Most of you guys already are. You guys hang out with me every week. Um, but yeah, if you got questions and stuff, we've had some really good discussions on Discord. That's what gets me going. It gets me thinking. It's one of those things where it's hard to kind of just generate stuff off the fly, but people will ask me questions and it really gets me in my head to thinking. And one of the things that's really got me thinking today was on Discord, asking me about the different phases of the market. So I want to go back to this point in 2022. And if we did a side by side, I mean, you guys can see when we look at the two, especially when you overlay Ichimoku. Ichimoku helps normalize price action in a lot of ways, and is really kind of uncanny, the similarities between 2022 or 2021 and 2022. I mean, you literally had a almost a repeat of the key price action that I say to look for. Case in point, you had a big run up. Oh, you can't see me because of my thing. There we go. Let's do this. So you had a big run up. All right. And that also culminated in a false breakout. That's where you have that little wick right there. Let's just zoom in. So you have a little wick and false breakout. That does a 50% pullback, roughly, not perfect, but nearly a 50% pullback there of the big trend that got it up there. And then it went up to make a marginally higher high, okay, which was also ended in a false breakout. And then you come down to basically, why do you do that, TradingView? What we have here, okay? And let's do this. Let's bring up, so I'm going to toggle between the two. Weekly Ichimoku. Okay. So, and you have something's very, very similar. It's very similar in many ways because this is the weekly. Both of these are the weekly time frame. Okay. You have an almost touch of the cloud on that pullback, which, as we said, that was almost a halfway. All right. So again, halfway of the trend that led up there. You also have that false breakout right there. And then, of course, it comes up and you have another false breakout and then the second pullback, just like we had the false breakout, second pullback. And so now what you're doing, like you did in 2022, is you're riding that cloud. You're now in the cloud decisively. And it's really a question of, is the cloud going to contain it or not? And so if we kind of go, and this is a few weeks, and so that's the important thing to understand about time and price, because price is a reflection of people's emotion, what the market feels about the value of whatever you're looking at. It doesn't matter if it's Bitcoin stocks, Tesla, you know, the everything is about people's perception and their feelings. That's what is reflected. That's what price is, what people feel something is worth. And it's based upon their fear, their greed, their desires, their ambitions, their risk aversion. And so when you have a big move, especially a big emotional move, because when something gets up to an all-time high, and I remember very distinctly back in October, the excitement was just everywhere. I stay apprised of social media. I kind of take it with a grain of salt because I presume that it's all captured by AI and fake. But you can get a little bit out of it. It's kind of not a good signal to noise ratio, but there's a lot of excitement. A lot of people think that, oh, well, we didn't have mass euphoria, therefore that wasn't the end of the bull cycle. Like bull cycles have to, but I think it just depends on what your level of mass euphoria might be. I mean, I knew a lot of people that were very excited at 126K. And then you have this very sudden fall off, and that's jarring emotionally. I mean, that sucks. Like nobody, that sucks. If you're long something and it makes a new high, and then all of a sudden it comes back down, and now you're back where you were a few months ago, that sucks. But you're not going to give up. You're not going to give up yet. Like that. Because the faith that had you hold all the way up to that high, that is not easily undone. And so once that happens, you enter into a little wait and see phase. And so this is kind of the wait and see phase. Nobody wants to blink. Nobody wants to sell their bags, but also, they might buy some. In fact, that's actually what I would characterize as going on right now. There's still a lot of denial. Let me take a step here. Let me caveat this. It would be so much better for social media engagement is if I said this is what's going to happen. Absolutely, but I'm a trader. I've been through so many cycles of so many instruments that it's made me humble. And I don't know what's going to happen. I know what are some likely eventualities, and I try to, trade and hedge and risk against all of these. I mean, I know what's not going to happen. I know the price is not going to stay there. It's not price. If anything, I do know false breakouts are some of the most reliable indications of reversal. Oh my God, they're so reliable. Speaking of which, we need to check Tesla here in a minute. I've been watching the weekly on Tesla. That's going to be really key. I haven't looked at it. I haven't seen what the close was. We had a big pump here at the end of the day, which is very interesting. Lots of stuff, everything pumped. Like, wow. Of course, my favorite, Monero, 7% today. That's in back time. We'll get to that in a minute. But this is here is the wait and see. Nobody wants to blink. And the thing that's really relevant to now in the phase of Bitcoin is we're in this wait and see. And that's the exact same moment that we're in right here. No one's going to blink. But if you haven't noticed, by the way, I made a point today. I put a point on Discord that I saw this little leg up, and it actually did what I like to see to take a trade, which is a spike, false breakout. It made a spike just like it did on the 17th of December. That was 2 days ago. Man, 2 days ago was very interesting. Did you guys see this? Hang on, let me find that meme. I had this detailed analysis that I published about it, and nobody really responded to that. But I tell you what people did respond to, if I can find it. Where's that? The 17th, yeah. Is this. Everybody got a lull out of this. Oh, because it's funny. There you go. That was the Wednesday price action. It was the Christmas tree price action. But the key thing I think I'm noticing this week is you thought that October the 10th was a manipulation. No, this is low volume to a T, where there's no one that's in control. Buyers and sellers are not in control, and they're just running it up only to slam it back down. And so while I was tempted to short this right here, my spidey sensors are getting pretty attuned to the fact that there's some games happening. I didn't want to carry a trade over the weekend. And here's why. Because what happened back what has been happening just in this period of consolidation, let's do the 1 hour. Let's kind of clean things up a little bit. Don't need any indicators to see it. Is the evil market makers, the lizard people, are running it up, slamming it down, running it up, slamming it down, running it up, slamming it down, running it up, slamming it down. They're playing games. They're taking people's money. I'm not going to play that game. This is not a high probability setup for me. And what I think is probably going to happen is they're going to do something like they did. I say they, but it's just the market, right? They're going to do something like they did back in March, which is they're going to break outside of this little consolidation range, okay? Notice how it's the same. A little consolidation, run it up, slam it, run it up, slam it. Let's go to the daily here. Ichimoku overlay really helps to kind of normalize everything. Hasn't really see, this is the thing. This may actually continue on for a little bit longer. Okay. Just like this continued on for quite a while, basically from January till March, and we're really only 1 month into this consolidation. So it could go on even longer, but at some point, they're going to have a run up. Like, I don't really think things are going to tank from here. That would be a little bit, for lack of a better word, too obvious. Okay. Anything can happen, but I really think they need one more push up. Okay. They need one more push up to get more people to FOMO in. And you got all these people that, some of them like saw the April and they got scared and they didn't buy. And they ran up to the all-time high and they're like, oh no, I didn't buy that opportunity. And so this time they have us. This is really like, I don't know for sure this is going to happen, but the guys just this is what I feel is going to happen. Okay. Just based on what happened the last time, a few years ago, and just how the market and the games work. You have a bunch of people that missed buying back in April, and they had to sit for months kicking themselves from missing out. Now they've got a second chance, and they're not going to miss it this time. And so they're using this opportunity to buy into it. And you know what? They're going to be rewarded. They're going to be rewarded with a little move up. Little move up to break this consolidation. Little trend, make them think that it's going to go. And then they're going to lose it. It's not going to look exactly the same. Nothing ever does. But the reason these patterns can be traded, the reason these should be studied, is because humans don't change. Humans do not change. Human emotion is unchanging. And that's why you can go back and you can read Reminiscences of a Stock Operator, one of my favorite books on trading and investing. And if you listen to some of the interviews, if you listen to the quotes of the people at the time that were speaking, they'll be talking about, oh, this is the next new technology. This is going to be the next big thing. Oh, you can't miss out on this. Same sentiment that you'll see when people talk about crypto or even AI. I mean, you got to understand, like, you could make a parallel between radio. Radio was another technology, and it was transformative at the time. This is about 100 years ago, right? Or more than 100 years ago. So this would be like the 19. Let's see. Hold on. Let's let me not just riff. Let me look it up. So use AI for this. When about was the radio stock boom? Yeah, 100 years ago. Like, here's the thing. Here's some homework for you guys, because I'm going to do this. Go back and see if you can consume some information, some stories. I should produce something like that. If I didn't have holidays coming up and I wanted to sit down, do some video editing, do some sleuthing, I would like to produce something, because I think this would be really valuable to make parallels between radio and AI, because both are transformative technologies. And I made a video about Amara's Law a few weeks ago about how people overestimate technology in the short run, but underestimate in the long run. Obviously, radio was very transformative, but the companies that were trying to capitalize on it, not all of them survived. In fact, most didn't. Just like the .com. Like, these things happen again and again and again and again and again and again and again. It's just a different narrative. The narrative doesn't matter. Because the narrative's always going to be different. You can't really study the narrative, but you can study the price action. So do a little research on that. See what parallels you can find. So yeah, that is what I feel is going to happen, and I'm pretty confident about that. So I'm kind of sitting here waiting. One thing that I don't have a feeling about is going to happen, that I know for sure is going to happen, is MicroStrategy is going to go badly. It's going to go badly. I've seen several iterations of the bubble. Let me see if I can find it. The anatomy of a bubble, basically. Let's see. Bring this back down. Images. Where is that thing? The one I showed last time was another thing, but there was a much better one. Actually, let me bring it. I think I put it on my Twitter. Hang on. Perhaps not. Although, by the way, on the 17th, I gotta say, like this, I have to point this out. This happened on the 17th, by the way. This was on Wednesday. This, if I was a seismologist, if I was a guy studying earthquakes, I would take a look at this chart. Oh, I'm not mashed up from my screen. There we go. I would look at this chart. Actually, let me fix this too. And I would sit here and look at this, and I would say, wow, there was an earthquake of volatility that happened. And here you have Monero, you have Bitcoin, you have Ethereum, you have Litecoin, you have Doge, you have Ripple, just, four that I picked. And which one of these is not like the other? Uh, what, if I was a seismologist, I would ask, what kind of rock is this island that was unmoved made of? And that's why I think that one of the things that is a feature about Monero, uh, just a little comparison here, Monero, Bitcoin, Ethereum, is that it has been delisted. You don't have as much manipulation. You don't have as much correlation. So where is that? Wish I could find that. Oh, well. Basically, we'll bring this back up. There was a much better one that like showed the phases of here's the regular one. Okay, but there was a much more granular one. Okay, right, which kind of goes through the whole process, stock market bubble, emotions. Trying to find it. Kind of have a little color coding. Yeah, here we go. Here we go. This is a much better. This, I think, is a lot more. Yeah. And I have a lot of friends that are buying this dip on MicroStrategy. And it's pretty clear that either we are in the, like, okay, let's just go through the cycles. All right. So there, can you guys see that? Yeah, I guess let's make this big enough. Yeah, they're very, boop, ba-doop, ba-doop. Oh, there we go. Nice. Okay. So you have the first leg up. Do this. There we go. And that is your hope phase. Then you have your disbelief. A lot of people weren't really buying into the whole Bitcoin thing, Bitcoin treasury, but that's when the optimism started. That's when the belief begins, the thrill and the euphoria. This was culminated in, and I thought it was, people were just they were just joking with me at the time, but infinite money glitch. You remember infinite money glitch? That was that November of last year's narrative. And that's when I began shorting it, because the guy was just dazzling people with bullshit. And you had that first little fall off. And then, of course, you have the complacency. Well, it's fine. We're going to go for the high. But, of course, it didn't. Another key element of price action. Something needs to go. If it doesn't go, it's a problem. And then, of course, this was the anxiety. So the question is, are we in anxiety or are we in denial? I think that we're in the denial phase. I really think so. By taking stock of what I've been reading on social media, talking to people one-on-one that are really still bullish on it. And if the key thing here, price action wise, is the 165 level, which is where it stalled off of. And to be fair, if I was looking to go long, this is a decent, well, as of last week, when it spiked that level, that 165 level there on December the 1st, or 2 weeks ago, that was a pretty good long, but this is not good. It should, first of all, it shouldn't have come back. And second of all, it should be responding to that level bullishly. This is not. This is bad, but we're going to have to wait and see what happens here. But I mean, the next level might be 131. But again, we're in that phase of denial that this is a bubble that has popped categorically. both in sentiment and in price action. Wish I could make a little. I mean, there's probably a little bit of money to be made on the short side. We'll see. But I'm flat. But it's uncanny. It's absolutely uncanny. All right. What symbols do you guys have to look for? I'm gonna do a year recap, talk about some of the calls for this year, um, and what I'm looking at for next year. Let me catch up with chat. Japan. My thoughts on Japan interest rates. Oh man, that's outside that's outside my pay grade, Jeremiah. I don't know, man. Like, I'm not gonna try to sit here and BS you like I know what the Japanese rates. I know. Like, look, okay, this is where having broad market experience allows me to heuristically sort of hand wave away it, because I know there's always something that people are talking about as the catalyst for something happening. Like I even saw a comparison, like every time Japan, does something with interest rates, Bitcoin does something else. Or everyone's trying to talk about Japanese interest rates now. It's probably why, that's why you want to ask me. I don't know. I mean, first of all, it is a major world economy, but it's not as big as the United States. It's not as big as Europe. It's not as big as China. So what effect it's going to have, I don't know. Maybe you can tell me. What do you think? What do you think, Jeremiah? What do you think? What do you think it means? What have you heard that it means? Because I look at a chart and I read the chart. I respond to setups. And if you show me a setup in the Japanese interest rates, I might have an opinion. But I'm not a macroeconomic trader. I don't know what the price of tea in China or the price of rice in Japan means to the price of the U.S. stock market or Bitcoin. So, yep. All right. I talked about MicroStrategy. All right, Tesla. So Tesla, again, one of the key indicators of a reversal is a false breakout. There is a potential false breakout, a little bit on Palantir, but it did actually close above it. So no, that's not it. What do you want to see? Well, a great example of a not false breakout, but a good breakout is Eli Lilly, which again, this was one I picked up in August. Eli Lilly, so this is kind of the recap. Eli Lilly has been making me money, very small dividend, but also just going up in value straight up and to the right. I've owned this well before COVID. I've owned this probably since the teens. Didn't do much for, I guess, well, in comparison. No, it's actually done a lot. It's just we have to look at a logarithmic table to see. I mean, this is a good stock. If you held a gun to my head and like said, I need you to allocate money into something, this would be one of them. Okay. And so this has just made me money. It's one of these things that nobody talks about on social media, but it just makes money. A lot of these things, a lot of these stocks that I love. Eli Lilly, Waste Management, Costco. You don't hear people like yelling about them on social media, except maybe me. I'll make a post about them every once in a while. But it did a pullback to a 50% level at 640 in August. Absolutely bought it. Absolutely. Oh, it's just give me more, and instant reward for that too. And this is what I call the technical term is big green dildo bar that punches up through an all-time high. Or it can be a big red dildo that punches down below low. But the premise is you want a big, solid candlestick to break a prior high, all-time high in this case. And that's going to give you the confidence. This is a real breakout. It's really just that simple. You want people to buy it up that week or month. Weekly is what I define it. And then close that week higher. Boom. And as you see, even with a little pullback to come back to confirm it, didn't even come back and touch it. But it's just going to win. Stock's just going to win. Bottom line. Tesla, though, I haven't looked at it, but I'm seeing this little negative number. I'm not feeling good about it. And it just counterpoint. What you don't want is what happened in Bitcoin back in October, where you had a false breakout which you also had back in December of 2024. False breakout. You don't want to have a little wick that pierces it and then closes back inside it, just like you didn't want to have a false breakout back in March 2021, just like you didn't want to have a false breakout in November 21. Tesla. Not good. Not good. Not good. Now, hashtag anything can happen. And I own a lot of Tesla. I own it from way back a few years now. But I still own a lot of Tesla. So do I want it to stop here? No, I don't. But, just like, Kroger. Kroger is another stock that I own a lot of. And it also false broke out. A little second false broke out, but that's not really close enough. You want to see buying. You want to see people rushing to push that thing up to higher highs. That's what you want to see. That's what you want to see. And if you don't see that, that's a warning. And so that is a false breakout now. You got 1 week. Now we'll give it another week. But perhaps next week I'll sell some covered calls on my positions because that is a way to hedge. Actually, I looked at that for a friend this week, and unfortunately, implied volatility is not very high. So you're not getting very much premium to sell covered calls. So I'm kind of like, that sucks. May still do it anyway. May take them really far out because, hey, anything can happen, but that's not good. That's not good. And I had a discussion with someone about this who also owns a bunch of Tesla. And I said, hey, is a big Bitcoin friend too. And I said, hey, you remember what happened to Bitcoin at 126K when it false break out? And I told you, and you laughed at me because you're like, oh, it's the highest it's ever been. How can you be bearish? Well, because there's a false breakout. It's a very reliable reversal indicator. Oh, you don't know what you're talking about. Oh, Bitcoin's going to be new money. Going to be, there's fixed supply. Everything's going to be measured in Bitcoin, not dollars. Oh, well, have fun staying poor. Okay. Well, the reason that I study this price action is because it's transferable to every single asset, every single symbol. And a false breakout, you see all the damn time. And so I said that to him. I said, like, yeah, we both love Teslas. We both have Teslas. We both love self-driving. And I said, dude, and he said, well, there's robo taxis that are coming, and there's going to be those Android robots. So Tesla is going to, explode. I was like, no, everybody knows that. That's priced in, as they say. That's why it's at an all-time high. But you have, this price action that's telling you that it's stalling out. People took it to the all-time high, but they're not breaking it higher. That's not good. And of course, he ignored me. He's like, technologies are the only thing that matter. Why do I even? Well, I do it because I want people to see this. I hope I communicate it so that people can separate themselves from the narratives, narratives are already priced in. They are the reflection of what the market already believes. There's no value in that. There's no outsized alpha in that. Doing what everybody's doing, there's no money that you're going to make beyond what everyone else is making. There's no there's no greater return that you're going to get just doing what everyone else is doing. You have to be able to say, no, market, you are wrong. And that's how you make money in the market. You take what the market says, what the price is, and you say, I think that's wrong. And you do the opposite, and now you get outsized return. That's the only way to do it. And by buying it when everyone says that it's just the best thing freaking ever, why do you think the inverse Kramer indicator or ETF is doing so well? Because he's a media personality. He just talks about what people are talking about. And most of the time, that's when it's at its all-time high because everyone's talking about it and bullish on it. It's just a reflection of the price, not the other way around. So, yeah, not buying Tesla. And actually, a friend of mine asked me this week, came back from vacation, and I've been he followed a lot of my calls. I don't like it when people just trust me in all my calls because then I become responsible. But he followed me into Dollar General, unfortunately for him, he sold back in the summer, and Dollar General now is up this year 91%. One of my biggest winners this year. I mean, I don't really count Palantir, obviously, I've owned since, single digits. And by the way, it's not like great single digits. I bought it at 9 and it went all the way down to 6. I just bag held it. So now it's up. So obviously, Palantir did better this year. One of the best stocks of 2025 for me, just because it is what it is. But my newest trades, my new trades I put on that were very good. One of them was Dollar General. And of course, I told him at the time, my target on Dollar General is to come all the way back up to the 200s. What are you doing selling it there? And obviously didn't follow me, but this has been a great trade. This has been a great one. Off of this volume profile level, this has established a new strategy for me, which is going back just this year. Just this year, I found setups on Dollar General. I also found it on Hershey's. That's another great trade from this year. And also, of course, UNH. Redraw that. UNH was another one where it came back down, and that was another addition from a week ago. It's another great trade of the year. 245 volume profile level. This multi-year in the long past volume profile level where a lot of the trading and price action happen. I don't know why. It's like a cheat code in the market for finding supports and resistances, but supports in this case for buying long-term stock holdings. And so UNH, Hershey's, I think Whirlpool is actually kind of hanging out around this level too, but these have been great opportunities, 91% this year. So, but of course, he's followed me into these, and every time I mention these to him, because he wants to be long Tesla. He wants me to tell him Tesla. He wants me to tell him Palantir. He wants me to tell him NVIDIA. That's what he wants. That's what people tend to want when they ask me, hey, what are you buying? And I'm like, okay, well, this year I'm not really that interested in tech. It's like, you don't want NVIDIA? I was like, yeah, I already own some. It's like, yeah, I don't want to buy more. I mean, it's already like all-time high. It's like, well, what about Tesla? I was like, well, yeah, I already own Tesla. I'm not going to buy any more. It's already at all-time high. I want to buy stuff when nobody wants it. But I said, and every time I presented this to him, I said, well, I'll tell you what I'm buying. You're not going to like it. It's Hershey's chocolate. I'm buying chocolate. This was in February. He's like, no, you can't buy that. RFK, he just became the health secretary. He's going to ban sweets. I was like, well, yeah, that's a little extreme, but okay. I see a level. I'm buying it. What I always say to him is, you're going to hate this. You're not going to like what I have to say, because I'm always doing what people aren't. And so, whenever he asked me here at the end of the year, and this is kind of my broad answer to the question that, people may ask, what trade are you, what's your trade right now? Now, January is going to change things. January is always the most month. It is the most biggest month. Either good or bad, depending on how you handle it. Either way, you're either going to set yourself up for the year with a big green positive return, or you're going to put yourself in a hole that now you've got to claw yourself out of for the rest of the year. That's how January has always gone for me. More often than not, I set myself up, but there have been several Januaries, namely that of the infamous, to me, infamous 2000 and what was it, 18? Yeah. So 2018 looked like this, where you came into the year, the January up, boom. That hurt me. It took me all the way until October, and then it wasn't even really this move. It was this move in December, and boom, one of my best years ever, because I was buying puts. But don't give up. Don't give up. Even if you ruin your account, your P&L for your year, I hate having a year P&L, because I want to put a piece of tape over the screen so I don't see it. But even if you mess up in January, it's okay. Don't give up. Don't give up. It just tells you there's volatility this year, and you can make it back. So, yeah, buck up. But he asked me, what are you doing now? What trade? I said, you're going to hate this. You're going to hate this. But My call right now is to buy US dollars in the money market account earning 3.5%. Ouch. I know that sucks. He wants to make money. Like inflation. They just said that CPI is 2.7%. I'm losing money. I gotta buy stuff. I can't just make 3.5% in a year. I'm told you were gonna hate it. I told you you were gonna hate it. I told you. I said when I tell you my trade, which is to put cash in a money market account right now, you're gonna hate it. And that's what I'm doing. The Obviously, if you talk to the Bitcoin people, they tell you that this is a buying opportunity. Why? Because they're in denial. I mean, I can't really buy what I really want to buy, which is more of Monero, because it's so high up there now. Just like I just can't buy highs. I can't do it. Can't buy gold for that same reason. Can't buy AI stocks for that reason. And I want to see. I gotta see remember we talked about earlier, a solid breakout, like a big green dildo bar on the weekly for the stock market, the ES, the S&P 500, in order for me to go bullish. Otherwise, I'll wait. And so right now, it's cash. Right now, the trade is cash for me. You don't have to do it. Hashtag not financial advice. But right now, for me, the trade is cash. We'll see. We'll see what happens in January. At least that's for the next 2 weeks. January, we'll see what happens. I'll definitely be here every weekend in January, because that is the week to be the most active. 100%. All right, let's see. Let me catch up the chat right here, guys. Get your symbols in that you want to look at. We've had some good ones in Discord. By the way, make sure that you like if you like me, if you like this, if you're useful, if you've learned something, if you've learned something. Don't like it if this is all old news to you, but like it if you've learned something. All right, so yeah. Oh, one more thing I wanted to talk about. Now I hesitate. Yeah, let me do it. Let me talk about it. This is a little more about Bitcoin. I have a rule that I'm pretty good about following. It's a no politics rule, unless it directly affects markets. And I'm really kind of just saying that I agree with this person here, where the TLDR is the opinion that Trump launching his meme coin, what is it doing now? Really, really hurt. Yeah, really hurt crypto, Bitcoin as a whole. And the thing I keep bringing back, the thing that you should look up, that you should learn today or any day, is the concept of a Faustian bargain, where someone makes a deal with the devil. Like they want a worldly possession or a worldly good thing to happen to them, but they lose their soul in the process. And Bitcoin, to me, has engaged in a few Faustian bargains over these last several years that have turned me off from it. Number one happened around 2013, long time ago, where people began talking about how they wanted more regulation. I was like, why do you want more regulation? I thought the whole point of Bitcoin was to subvert the established banking systems. Like, well, we want more regulation so that then there can be more mainstream adoption, and then the number will go up, which was kind of not always stated, but that's really what was stated. And so they traded the non-compliance of the original ethos of Bitcoin for compliance, such that they could get what they have now, which is Wall Street involvement, because Wall Street can feel confident investing in it and building financial products around it. So that's the other Faustian bargain, getting Wall Street involved. And as I've said in past live streams, it's if you just look at the volume from back when the ETF launched, which was here in January 2024, volume was nice and healthy for the most part for the whole thing, no matter what it was. And it has just precipitously gone down because all the volume is being done in the ETFs now and the products, not on chain. And that's going to hurt the miners in the long run. The miners are not going to make enough money to maintain the network because there's not enough transactions happening on chain because Bitcoin is being traded in derivatives now. It's a Faustian bargain. They traded one thing for another. They traded the ETF to make the number go up for wealth, while at the same time losing the soul of Bitcoin as a transaction or layer for currency and internet money. And of course, the other Faustian bargain was that they tied their, they hooked their horse, they tied their carriage to the Trump administration. I don't know if you guys know this or not. I'm not going to go into it, but there's a little bit of like tension when it comes to politics, such that whenever, Trump is for something, a lot of people are against it just because, they don't like him or, and frankly, the Trump coin was a scam as well. So that didn't help either. But, he definitely pandered to the crypto libertarian base. He spoke at the Libertarian Conference in 2024, talked about Bitcoin. But now that he's been in for about a year now, nothing has really gone forward in crypto. Like you're not getting the taxpayer funded bailout. I mean, strategic Bitcoin reserve. That's not happening. That was one of the reasons it was pushing price up, was because there was talk of institutional involvement, sovereign wealth funds, strategic Bitcoin reserves. Like that was going to be what the next phase to push the price higher was going to be. And it didn't happen. It hasn't happened. And that's probably big reason why you have the stall in price. But the problem now that I see coming down the pipe is politics is a pendulum, just like markets have a cyclicality to them, so too do politics. It's 2026. The highest probability, because that's what I deal in, is probability, is that the Democrats here in America are going to retake the Congress, and they are not going to like anything that Trump was for. And so, because Bitcoin and crypto hooked in with Trump, they're not going to be very friendly to that. And so that's in a few months. That's 2026 is just a few weeks away. But the political cycle that is going to happen in November of 2026. And I think we are entering into a bear phase of the market, a Bitcoin bear phase. That's going to happen November of 2026 on the weekly here. We can see it. That's going to happen in a bear phase. And that's going to be an exacerbating part of the price action going into next year. So I do not have bullish, and that's why I'm open. I'm open to the possibility that Bitcoin could rise in price from here, ride the weekly cloud up, go back up again. Because again, it's not in bearish territory yet. The bearish territory is when price and momentum get on the bearish side of the cloud. We're not there yet. There's still a chance. What I'm saying is there's still a chance, but not if it gets below the cloud here, and not going into a year where there's going to be a lot more headwinds. I think it's going to be a perfect storm of bad if it's a bear market and the winds of politics in America shift. That's what I see coming for 2026. You have a small chance of perhaps recovery, but you have a much larger chance of multiple conflating bads. But we'll follow I'm going to trust the price action above all. So, all right. Let's see what we got. For Wizzo asked, do I swing trade? Yes. I trade. I limit myself not at all. I don't trade often, but when I do, I win. So whatever goes, looks at. I heard someone was saying that Rivian was popping today too. Yeah, let's take a look at that. Hey, that's good. That's actually really good. That's a nice little weekly breakout there. That's good. That's very, very good. I like it. I like it a lot. I don't own Rivian. I'm kind of regretful that I don't. I have Tesla. I wish the Tesla would just buy Rivian, but that's good. I wouldn't sell it here. Let's see. Hold on to your Rivian. Let me live vicariously through you. Maybe I'll look for a setup here on a pullback, but that's good. That's a good solid breakout. It's happening after a long consolidation, after people have kind of given up on it. That's the kind of breakout that you want to be in, where everyone's kind of written it off. Oh, blah, blah, this company's not good, blah, blah, blah. And now you finally have a breakout. This is good. The Rivian's looking good. Adobe. Do I have thoughts on Adobe? It's kind of yikes. I mean, if I really zoom out, I'll see that I already kind of have a 50% level done. But this invokes, notice I have a circle because people probably asked me before. Here's the thing. I'm all about 50% levels. This is one of the key elements of my trading is 50% levels, in addition to false breakouts and volume profile levels. And what you'll see a lot of times, like let me just bring up Amazon as a quintessential example. Amazon, which I cited a few years ago as the trade of the century. Amazon from the low to the high, back in the low in 2001 .com era, all the way up to the high of 2021, it pulled back to its 50% level back in 2022, end of 2022. What an amazing trade. What an obvious trade. Like you pull a company like Amazon pulls back. This is the kind of stuff that I wait for. A company like Amazon pulls back 50% from its high. What, are they going out of business? No. That's a buy. These are infrequent, but at the time, it's sort of like I gaslight myself, like, it's just obvious. Is it not? But anyway, this is the quintessential example of a good pullback. And the key thing here is really just as simple. You can say it went. It came back up to retest this high and beat it. Now, Adobe, it came to its 50%, hung around, tried to retest the high, failed. Not good. And now you see it coming all the way back down. It's back below that level. No, not good. Not good. Now you're in the value. Now you're going into the value of risk, likely. I would not be a buyer here. DJT, Jeremiah, are you trolling me? Hey, your prices not seen since 1 month ago on DJT. This is a good example of, anatomy of a bubble. And this is probably what's going to happen with MicroStrategy as well. You have the big initial bubble. You have, of course, that, fall off right there. But here's the thing that I have added to the model of the bubble, which is, I think, just as, if not more important, is the aftershocks of a bubble, where you have these little hopium rallies. You can see this in GME. I even talked about it a couple weeks ago. Hope. You all, like after a bubble dies, you've always got those people that are just kind of sitting out there hanging out. They refuse to leave. And someone comes in like, hey, let's pump this thing up again because we know there's a lot of, excitement and media attention that's going to come to it. And so I would be wary of any little rally. I mean, you can make money if you play it right, but it's just not my way of making money. So, all right. F-Cell. Oh, let's see. Let me go back a little bit. So I'm thinking Pfizer. Pfizer is something that I think I want to buy, but I'm waiting for it to come back down even. I want it to be even more dead. Like it's not dead enough. Like I want it to come all the way back down to these lows of 2008, where the volume profile is 1625 on Pfizer. That's where I've got marked off. That's what I'm looking for. Just like someone asked me today about UPS, I get asked that a lot. I want to see about 73.10 on that. Again, I'm going to stick with my strategy here where I'm looking for these long-term, like multi-year volume profile levels, but way back where people don't think that it can go. Okay, I'll buy it at the point you don't think you can get to. I'll risk missing it. So SCHD, that is the dividend, right? SCHD. Yeah, that's the swab equity. I actually have this in one of my stock holdings, and it consistently underperforms. Now, granted, it has less risk because what you do have in this is the companies that pay dividends. Okay. Which means you can also get a dividend off of it. So it's good if you're retired and you have fixed income, you want to pull money out for income. But what it doesn't have categorically is tech, because tech companies or growth companies broadly don't pay dividends. And so you just don't get the same returns as you would a standard S&P index fund. So there's your difference right there. So if you are retired and you want to generate income and you want to have some kind of you want to have less gains but also less volatility, SPHD is a good choice. Like I said, I have it. It's sort of kind of like it kind of sits out there, a little small chunk, a little 1% allocation kind of thing. But most of what I have when I'm like in my, just buy the market, I don't know what else to do, is VU and chill being the meme. Yeah. So I have more VU than I have way more VU than I do SPHD. So that's for sure. Let's see. F cell. Fuel Cell Energy. So I don't know exactly what this company, Fuel Cell Energy. Oh, okay. So it's kind of I had a discussion earlier this week about, are we entering into stagflation? Short answer is no. But if we did, I would probably start looking for energy stocks because those are the ones that are going to benefit from inflation the most. At least if you go back and you look at the actual stagflation of the 1970s and 80s, but that's not what you're saying. Again, this is one of those bubble pops. Remember what I was saying? The thing that people don't really study as much when they make this model here. You can go and you can do a search for, you can find like this model and see my addition, my adding to the full human knowledge when it comes to studying bubbles, at least I try to, is these little hopium pumps. You always have these little hopium pumps, and they never quite beat it. Now, at any point, at some random point, you might get a breakout. And of course, what I'm going to use to define that is Ichimoku. And as we looked at just a minute ago with the Rivian, you can see that playing out here where it's below the cloud, and then you finally have price and momentum get above the cloud. Now you have a breakout. That is a classic breakout. I actually learned that many years ago when I was first studying this with Alcoa. This was that's 2020. Yeah. So I played this breakout on Alcoa back in 2013. This was my first year of being a professional trader. I saw and found this Alcoa breakout. Now, of course, it didn't go on forever, but that was a really, really nice breakout that I remember to this day, 12 years later. Again, price above the cloud, momentum above the cloud. That's a classic Ichimoku breakout. It's great. That is a great signal. And just like what you have right now, why I said I liked the Rivian was because you do have that happening. This is a good breakout. And so back to your F cell, what you want to look for is you want to look for price to get, again, above the cloud and momentum. Now, just looking at this, you need either a huge move up. And momentum, by the way, is this purple line, which is Chikou. So it's basically the closing price shifted backwards, but you want that to get out. And so you need like it to pop up to 21, 22, 23 today to get it as a breakout, which is asking a lot, or watch it for maybe about another 2 months. And that's going to move the momentum as well forward. And then it's going to be a lot easier to get that out. So you see how that works? So you either need a big move or you need to wait a little bit more. So, but either way, time, price, all factored in, all factored in. All right, hymns. I think that they haven't been doing too well. Oh, no. See, this is one I've been asked before, and I've already got it marked up. So this is the key example, like I was saying about The Amazon, good. Adobe, bad. Remember? So Amazon hit its 50%, came back up, boom, broke it. Adobe hit it 50%, did not go, bam, bad. And so HIMS is another example of, well, it's just all over the freaking place. But if I was going to draw the 50%, it'd be here and never really held it. But the key thing here is like, uh, 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 no, and ooh, that's no, that's not good. Now, if I were I want to buy it when it's dead type of person, the first level I start looking at it is probably at 21. That's where you really start to get into some significant volume profile levels. This is a little bit more of a arithmetic. In other words, it's just because the price is kind of low. But yeah, I would actually be comfortable looking at it there. Yeah, that's where you really kind of start around 21, 21.42, or if you want to be really, really cute, 16. But yeah, it's in the value of risk right now. So Vasca, I love you. I love you talking about XMR. It is my favorite cryptocurrency, up 7% today. Look, I got asked this on Discord. By the way, hop in Discord. I talk every day. And someone asked me like, what chart setups do you look for in Monero and XMR USD? And I said it honestly, I don't know. The thing about it doesn't respect 50% breakouts. In fact, you know how I've talked all live stream about false breakouts? Well, it did a classic false breakout on November on the weekly. And I noted it. I said, well, all right, that's a false breakout. You know, that's a potential reversal. But of course, on Monero, this was the exception to my own rule. At least for now. What's funny is it's 420. And that's the level that it's holding. But you know what? I just DCA. I do the thing that the Bitcoin people do. Look, I can trade any instrument, at least I believe, but when I've tried to find some kind of like strategy or some kind of setup on Monero, it just doesn't work. It defies it actually does the thing Bitcoin they say it'll do. It defies my models. And so I'm just content to have a humble approach to it. I think that the adoption is increasing. I think that every day that I look at it, I look at look at my watch list. It's usually always winning. Of course, you know, BCH, yeah, Zcash. I'll get to that in a second. But I just like Monero. I like its ethos. I like that it is uncompromising in its privacy and people use it. And it, especially in a bear market, this is another feature of Monero that, you know, if you go back and you do an XMR BTC, what you'll see is that in the last bear market from January to here, Monero outperformed Bitcoin by almost 150% because it held its value, whereas Bitcoin went down. And now we're almost back to a point where of break even for 2 years on Monero versus Bitcoin. This is even since the ETF. The ETF, the Monero is worth more now because the ETF for Bitcoin launched in January of 2024. Monero, if you would have put money into the Bitcoin ETF or if you would have put money into Monero, you would have made more money in Monero. And Bitcoin had an ETF. How about that? Delistings, no ETF, no corporate Ponzi's, no XMR strategy, just people using it as online currency. I like it. I still think it's the most asymmetric. I think it's the best asymmetric bet in crypto still. I do. So, How do you pick the bottom? Okay. So BCH looking good. I don't really spend much time looking at BCH, but it looks pretty good. Yeah, that's pretty good. Zcash is one of the most obvious pump and dumps I have ever freaking seen in my career. That's why Zcash is confusing. It's just amusing to me that just a couple of months ago, like in October, you had all these people like the Winklevi twins and all these like big knives, crypto influencers coming out and saying like, "Oh, Zcash, it's private and it's going to outdo Bitcoin because it can be regulated." It's like those things are mutually exclusive, guys. The network is hold on. There's another thing. Like Zcash was it very recently? The people that it issues Zcash suing. So someone like the people that run Zcash, which by the way there is, yeah. So they're suing social media influencers for talking about or making things related to Zcash. Like, what if the CEO of Bitcoin were to sue people? I mean, geez. But like the fact that you have like a centralized authority that's running this cryptocurrency that's actually filing lawsuits against social media people because they're trying to do a coordinated social media pump campaign and they can't have individual people doing it. It's just so obviously astroturfed. I'm not fucking touching this thing. But also, hopefully this can find it. Yeah. So like this is the mining pool, and that 70% of mining is being done by the people that run Zcash. It's absolutely it has it's not centralized at all. So it's not centralized. It's massively astroturfed. It's not actually private. It's I'm not even going into the conspiracy theories about who owns it, who made it, and who controls it. But it's not centralized. It's not actually private, or not private by default. And they're paying people to pump this thing. So like I've watched this thing with I've tried to be. I mean I'm neutral as much as I am. Like whatever, if you want to buy it, it's fine. But no, no, no. Have fun with that. All right. How do you pick the bottom? Well, this is where a general rule. Well, that didn't obviously hymns didn't, but let's just talk about Amazon. I always try to look as like a baseline for doing 50%, like as if it's going to be a trade. I always look for 3-to-1 risk reward ratio. So without getting any more granular, what I'll do is say like, okay, I'm buying at 50%. I want it to hit the high. So I'm going to make my stop 3-to-1. And that's how I'm going to give myself enough wiggle room on this trade before I stop out. Because if it breaks below the 50%, it goes into what I call the valley of risk. You don't want it to do that. Quintessential example of the value of risk was Zillow, which I took and got out of when it broke below it. And this is what you want to avoid when it hits the 50%. This is bad. So you got to be, or what you can do is once it hits that level, set a stop below the low, like in the case of Zillow. I probably started as something like this with a 3-to-1. But then when it broke the low, I got out back here, and this is in 2021. I keep using the example because this is the example of what you always want to avoid. This is why you don't bag hold beyond that 50%. But how do you pick it? Look, you're never going to be precise. You can increase your precision by adding a volume profile. Like in the case of Amazon, one could have come in and let it hit the 50% and then been a little patient and let it come down to the matching 89 or 90. Maybe save yourself an extra $6 on that. You know, don't try to be too exact about it, but just understanding where your risk is. That's the main thing. Okay. So you can kind of refine it that way, but I have a counterexample for that. LLY, I just kind of YOLO'd and bought it because I love the stock so much. It had a a volume profile level below it that it did not touch, and I would have missed it. And so I made the call. I'm just going to take it at that 50% level because this, whatever, if it comes down to 595, I like it anyway. So I went ahead and went with it, and that was the right call there. And so that I know that adds a little bit of arbitrariness, and maybe you're looking for an exact answer, but this is markets, and we got to get into we got to flow. We got to flow with it, and you got to just make the only thing you can control is your entry and your exit. What you're trying to ask about the entry, that's good, but once you're already in, then you control your exit. So just know where the exit is from your entry. Make sure you size properly, and you won't worry so much. That's the best I can tell you there. But I go in at the 50%, and then I understand that my stop, of course, needs to be below the volume profile level to give it that room. That's how I handle things. So I go for it. I go for it. AEO, AEIOU, Eagle Outfitters. It's looking good. I think there's a couple of volume. It's a wonky chart. Like I think probably I drew up a few of these levels in the past, but I don't know. I like. Here's the thing. Like if I don't have an opinion, I just don't have an opinion. I like 50% levels. I like volume profile levels, and I like reversals, and then the occasional Ichimoku breakout, like we talked about. And if it doesn't have any of those, well, I'll find something else. I don't have to trade any particular thing, but that's not something I trade. It's just not. All right, so AEO probably your best. Oh, okay, so good for you, Jeremiah. That's great. Yeah, no, Zcash is trash, but on the monthly cipher is, well, like I said, I'm trying to be neutral, but I'm just telling you guys, this is just a pump and dump. I mean, it did dump, but I gotta say, it's at the 50%, 389. Okay, all right. I'm not. Have fun. I'm not going to join you in it. I like my Monero. Look, the only crypto I care about right now is Monero. And it's the only one I've cared about all year. Actually, for the last few years. And 2025, 2025, I didn't buy any Bitcoin. I shorted MicroStrategy, and I stayed long Monero. And I'm 3 for 3. Now I got to find some new ideas for next year, but it was actually a very difficult year. It was actually, let me kind of get to, is that all the ones for look at? Yeah, we'll look at silver. Okay, let's look at silver, and then I'll kind of start to wrap things up a little bit. So gold is punching for a new all-time high. Silver probably just won't stop, eh? Yeah. I think, though, that if gold starts to fail, silver is going to get brought down too. At this point in silver, I'm not buying it because I don't buy highs. Very happy for all my friends that are in it. I'm not going to call a top on it. Not yet. But what I've said in past live streams is to go, quote unquote, zoom out, bro, and note that silver, it has done these kind of things before. Has done massive legs up, but these are not sustained moves. So in other words, I'm pretty confident. I'm not confident in where it's going to stop, but I am confident that when it stops, what won't happen is it stops and does this. What I am confident will happen is it stops and it does this, based on history. So that's my caution on silver. It's a musical chairs, like it always has been, and you're gonna have to play the music right on that. So that's my answer to silver. It looks like it will, but I think actually gold is going to be the definer of it. I mean, that's what it basically like. See, just let me see if I'm right. I could be wrong. So gold really started its rally in March of 2024, and it really did a breakout here. So the two key dates I look at are March of 24 and September 25. So what does that match up with? on this. So March of 24 and September of 25. Yeah. I mean, they're both kind of they're different, but they're operating on the same. Let's just say like they're two different bands, but they're basically the same genre. They have a their audience overlaps. Okay, like one could open a set for the other. So they're gonna be running on the same kind of hype essentially. So yeah. All right. So 2025, I made those hard calls, especially in crypto, because I got a lot of friends who are in crypto, and um, I kind of do want to do. I'm not going to do a victory lap, but I just want to say that 2025 was a difficult year that ended very well because I when this the MicroStrategy short was one of the largest trades of my career. And by the nature of that, it was also the most emotional because when I started shorting it with SMST, which was the short inverse leveraged 2x leverage, horrible product. Don't do leverage ETFs. I was stupid. I knew not to. But when I started buying puts, everything was going well until it didn't. And so I basically had to close my platform in the summer and just leave these puts on because I had them out to 2026 and 2027. Like I had a lot of January 2026 and January 2027 leaps. Um, and so ate a lot of theta decay. They were all in the negative, big red numbers on my account. I just didn't want to look at it because um, I had fixed risk and I was going to, it's going to be what it's going to be. And so this was, I mean, if you were close to me and you talked to me, there was a lot of consternation, but I held my guns. And because I had conviction and it paid off. And the weird thing is everyone else has conviction it's going to go up, and they're saying the same thing now. I'm flat. I closed my short 2 weeks ago. And we're going to see what happens. But I want you guys to know that like at some point you do have to put it on the line for a long-term trade. I mean, I day trade, I swing trade, and then I do a trade like this, or I buy stocks and hold them. But at some point, like when you see something and you're absolutely convicted, you got to stick to your guns. But the main thing is fixed risk. Like I always knew by using puts that it was going to, it was only going to hurt me so much. And yeah, but at the end of the day, at the end of this year, this worked out. And it's very validating. And also the same thing with Monero. Every time I talk about Monero, especially among Bitcoin people from, the beginning of the year, and then we had this little thing in August where they thought the network was going to get taken over. But, 128%. MicroStrategy from, I think it wasn't this week. It was a little bit after that big thing. And I didn't close it. I think I closed it at like 200. So 57, half, took half off of the MicroStrategy. And then of course, Bitcoin, my dollars are worth more than they were, at the beginning of the year. So the reason I was able to do that is because I took a look at what everyone was saying and doing. And I didn't necessarily assume they were wrong. It's just that I was just like, man, they are really overconfident. And also MicroStrategy is a scammer. So, all right. Thank you, Swindon. I appreciate that. Hop on a Discord too and come talk to me. I have some pretty good discussions there. I go into long, late night discussions with people about different theses and stuff like that. But yeah, this will be the last stream of the year, guys. But I will be back on the 2nd for sure to start the new year. Be ready. January can make or break you, but it's going to be the most active month. January into February, that first quarter matters a lot. So get a lot of sleep, get a lot of rest, spend time with your loved ones, have a Merry Christmas and a happy holiday. And yeah, thank you guys for hanging out. We'll see you next year. Bye-bye.